Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague here, Yatin Mota, who's celebrating Yoga Day along with the markets.
Actually, yoga is quite necessary for the markets and for all of us because obviously we go through lots of ups and downs in the markets, and yoga is something which keeps our stresses away. And probably on the occasion of International Yoga Day, we have a huge celebration not only in India but across the globe, and probably to mark that Yoga Day, you are seeing my outfit, probably semi-Indian today.
Yeah, but there were quite a few moves in the market as well, right? It seems like the market's also stretching here and there because the Nifty hit a fresh high in intraday trade of somewhere around 23,667 before pulling back. It in fact dived somewhere around 250 points from the day's high. Although we've ended in the red below that or just about around that 23,500 mark. The broader markets were outperforming today as well, but they came off day's high and ended the day in the red. Although on a weekly basis they have outperformed the benchmarks and ended high by about 1% or thereabouts. For the week, the Nifty and Sensex have seen 2/10 or 3/10 of a percent kind of a gain, but as I mentioned, broader markets have outperformed. But today's session was volatile. Markets have turned volatile at highs, and the advanced decline ratio today was tilted towards the losers. Most of the sectors were trading in the red by the end of the day, barring the IT and metals pack. Of course, IT pack reacting to the commentary coming in from Accenture and some of the brokerages giving out comments on Indian IT stocks as well. So reacting to that, the IT stocks were doing well today. Aside of that, if you look at the top laggards, FMCG and PSU banking index, those two indices were down by over 1% or thereabouts. Nifty Bank, this week saw a fair bit of action. In fact, came very close to 52,000 mark, but ended the day in the red. However, for the week, the Nifty Bank index has gained somewhere around 3.5%, and IT pack also for the week is up somewhere around 2%. Let's take a look at the movers then. In terms of index, the Nifty 50 had gainers like Airtel, LTI Mindtree, Infosys, Hindalco as well as Adani Ports. On the flip side, what didn't do well was Ultratech Cement, Adani Enterprises, L&T, Tata Motors, Nestle, etc. Also, BPCL of course was showing 50% down because it's gone ex bonus. 1:1. So because of that, it was showing a 50% downtick on the stock prices, but it's really the stock going ex bonus. But Yatin, some of the stocks were moving due to the changes on the FTSE index also, right?
Yeah.
And aside of that, fertilizer stocks came under selling pressure today.
Absolutely, some profit taking there, but talking about Nifty 500, the gainers, we had railway stocks in focus. We had Railtel, Titagarh Wagon, RVNL, all of these stocks up anywhere between 5 to 10%. What was also doing well is the likes of Honasa Consumer, and this name was also in the FTSE rebalancing list. There was a buy on this one. MapMyIndia yesterday 20% up, today also another 5% move coming in for that stock. On the losing side, we had a profit taking in most of these fertilizer stocks which moved 5, 10, 15% yesterday. So we have Chambal Fertilizers down 7%, RCF down 7%, GNFC down 6.5%, Deepak Fertilizer, Coromandel. So the Nifty 500, the top 5-10 names, are from the fertilizer pack, which moved up higher in trade yesterday. Also, GM Finance, on the back of SEBI order barring them from carrying out any investment banking activities with relating to debt raising, led the stock down by nearly 5%. We also had stocks like Kenplast, fundraising announcement there, but stock down 3%, BSC down 3%, Marico down 3% after Jefferies reduce the weight on this particular stock in the model portfolio. So Nandita, a lot of stocks and a lot of profit taking in the markets today.
That's true, but I think before we move on to our stocks, let's talk about the GST Council meeting that's slated for today.
Yeah.
Big event. Lots of sectors will be in focus, including the fertilizer pack. What is likely to be on the agenda for tomorrow?
Yeah, so the GST meeting, which will take place for the next few days, we have a lot of consultation meetings going on in the Fitment Committee, the GST Council. So they're likely to extend relief from retrospective GST action. That is one thing to watch out for. They also might consider reducing GST on fertilizer to 0 from 5%, but I think this will take more time. We also have clarification likely on spectrum allotment to telecom companies, applicable GST on spectrum related payments, and review of 28% levy on online games and horse racing. However, this review, according to media reports, is no more on the agenda. So yes, these are a few things we will watch out for, but a lot of speculation as to where the GST goes up, goes down, gets reviewed. I think the outcome will clear all the air when it comes to the GST Council's outcome and the committee which is basically reviewing all of these proposals.
That's true. Important, proposals being examined tomorrow, hopefully, and markets will clearly be reacting to it on Monday. But on that note, let's take a look at the stocks that are on our radar this afternoon. How can we not talk about IT stocks? That was the flavor of the day after Accenture reported its third quarter numbers. Revenues at $16.5 billion, up 1.5% almost in CC terms, constant currency terms, but down 1% in dollar terms. New bookings are also pretty healthy at $21.1 billion, up 26% in constant currency terms. Although the company has tightened its FY24 revenue guidance to 1.5 to 2.5% versus 1 to 3% earlier, which indicates that there is no signs of any kind of improvement or revival in discretionary demand as of yet. Margin guidance has been kept unchanged. Generative AI bookings have come in at over $900 million for the quarter. It continues to see strong demand from digital manufacturing and engineering services, and discretionary demand or spending is constrained, especially in terms of smaller projects. Let's take a look at what Morgan Stanley and other brokerages are saying about Indian IT companies in light of what Accenture has guided. Morgan Stanley has noted that although there is no improvement in discretionary demand, but there are some positive data points that have come out of Accenture's third quarter performance. Strategy, consulting, all of these verticals are seen returning to growth. There have been pickup in smaller deals as well, and that's evident because Wipro and HCL Tech, for one, have bagged deals in the range of $200 to $500 million, right? And even today, TCS has announced that it's partnering with Xerox to transform its IT technology using cloud and generative AI as well, right? So deals are coming, but at a smaller scale. And growth rates, according to Morgan Stanley, may have now bottomed out. The street was waiting to hear this statement, and at least brokerages feel that that may have happened for now. And even CLSA has said that there's a huge focus on generative AI across verticals, which is of course, at least in terms of global names, Nvidia, we've seen how it has rallied, right? So that's evident. But for the likes of TCS, Infosys and Wipro, CLSA sees no material change with vis-a-vis the March quarter. And it also points out that there could be further downgrade to consensus EPS going forward. But Nomura has also said that they are cautious as discretionary demand revival is still some time away. But there are some robust deal wins that are led by large cost takeout projects, right? And their top picks are Tech Mahindra, because there's been some bit of improvement in telecom deals, and that's something that bodes well for Tech Mahindra because it has a higher exposure to the telecom vertical. Aside of that, top mid-cap picks include the likes of Coforge, Birlasoft and eClerx, and Nomura has reduced its rating on TCS, Wipro, LTI, L&T Tech and Emphasis. But it has also mentioned that it's time to be selective with respect to IT names.
Absolutely, and IT stocks, Accenture, the initial read was that they have reduced the guidance, but I think they're in the third quarter, and the year ending is next quarter. So the Q4 typically comes next quarter. So they've reduced the band of the guidance because they are at the fang end of their financial year. So they typically end their year in September. So that is the reason why few of the market analysts and people were confused. But Accenture clearly sees more opportunities from generative AI. And that is where probably Indian companies do have an upper hand. And
I think TCS was the only one that reported its revenue with respect to AI, which is a nascent technology.
So I think a lot of Indian IT companies are working on that front. Should do something good, and we'll get more clarity as to how Indian companies are doing. I think TCS, Infosys have started already giving their quarterly numbers.
July 11th and 18th.
Yeah. But that apart, we had a lot of stocks in focus in the mid-cap space, especially Bikaji Foods, and it's Friday. So some savories on the table, obviously, when it comes to brokerages. Now, Nuvama has initiated a buy on Bikaji Foods. Target is 885. Which is 23% upside from yesterday's closing price. Now, Nuvama believes that the snacking space in India is exciting space with high growth opportunities, a lot of consolidation in the sector, and probably, given the fact that the asset utilization will move up for Bikaji Foods, Edelweiss believes, which is Nuvama believes that a 32% return on capital employed is now possible for Bikaji Foods. Now, if you look at the trends, brand equity, favorable trends, and the expansion mode which the company has adopted in terms of aggressive strategy, that will work well. And not only snacks, the company also has sweets and savories, which is a new vertical wherein good traction is seen. And I think in general, there is awareness in the marketplace to eat more branded snacks rather than get some local flavor. I think that theme is also something that the market is expecting, because the shift from unbranded foods to branded foods probably is working in metros for India, and that will benefit companies like Bikaji Foods, and hence that bullish tone and bullish note coming in from Noam on Bikaji.
Well, opportune day, Friday, to talk about some of these snacking, names like Bikaji. But with that, I think we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Have a great weekend. Of course, come back afresh on Monday morning and join us on Opening Bell as well. And there'll be a lot of reaction to what really happens at the GST meeting as well. But have a great weekend. From Yatin and me, thanks a lot for watching. But stay tuned and see you on the other side.